Hi there, PayPal Holdings. As you can see year to date, the stock price has increased by 1%. Of course, if you look at the highest peak, back in 2021, the stock price was about $300. If you can believe that, $300. And then the stock price has declined by over 79%. And as you can see, the market cap is about 65 billion and the PE ratio about 15. If you look at their balance sheet, you can see that they have 17.7 billion in cash and other investments. Plus, this company, PayPal, generates about 4 billion in earnings. And of course, those earnings are expected to grow even more in the future to over 6 billion. So their revenue. And many investors think that this company is a bargain at the current level of $62 per share. Imagine if the stock price goes back to $300, then your return will be quite great. Over 3x. Quite even more, almost 5x. But be aware that everything depends on their future earnings. If this company, PayPal, can gain more market share, attract more users to their services, and of course increase their revenue. You can easily see in this image. The revenue was about 29 billion in 2023 and is expected to grow to over 44 billion by 2028. Their earnings were about 4.2 billion in 2023 and are expected to increase to over 6.8 billion. These are the analyst estimates, what the market expects from PayPal. But you also have to be aware that those estimates change all the time, month by month, or sometimes even faster. So you can look at the estimates, make an overview of this company, what the market expects, and assess its future outlook, if this company is really undervalued at the current level. So, if they keep growing, then yes, this company may be a bargain. Or fairly valued. If you look at the fair value per share, based on the analyst estimates, you can see that it's close to the stock price. $61 the fair value and the stock price $62. Of course, this is based on the analyst estimates and the growth rate. If PayPal can increase their earnings more in the future, then the fair value may be about $81 for a 10% annual return. As I said, if they can make more than 6 billion in earnings, let's say 8 billion, then the fair value goes to $100. And of course, the multiple may be even higher. So the fair value may be over $100 per share. But we have to assess this business on multiple scenarios and see if in the worst case scenario, this company is still a bargain. As you can see here, if PayPal stop growing, their earnings decline, then also the stock price may go down another 50%. That's why you have to be aware of the risk and of course the upside, the reward. So if you look at the latest reports, the latest results for Q1 2024, you can see that they are doing quite great. Their revenue, net revenue, has increased by 9% to 7.7 billion in the first quarter of 2024. Their operating income has increased by 17%, and this is quite a high growth rate. If they can maintain this growth rate, then yes, the fair value may be higher than $100 per share. That can happen only if they maintain this high growth rate. So be aware of their growth rate. Of course, they also have other indicators such as total payment volume, which has increased by 14%, and this is quite good compared to the prior quarter, Q1 2023. And active accounts has increased by 1% to 427 million. This is quite an important indicator, and you have to pay attention to this because everything depends on their users. If they have more users, then also the total payment volume increases, and so their earnings, because they can charge a fee to a higher volume, total payment volume. You can also see their cash flow for the last 12 months. Cash flow was about 5.6 billion. Cash from operations, and their free cash flow was about 5 billion. So this company right now is generating about 5 billion in free cash flow. 5 billion. And the market cap is about 65 billion. If they can increase this free cash flow to have a growth rate over 10%, then the market cap can go over 100 billion and you can have a double from the current level. But as I said, only if PayPal can increase their free cash flow. So you have to ask the question, can PayPal increase its free cash flow more in the future? And the answer may be yes or not. And I'll show you what I think about the future of this company, PayPal. And of course, besides this free cash flow, they also have 17.7 billion in cash. Now, don't get too happy because they also have 11 billion in debt. So, if you subtract their total debt from their cash and investments, then their net cash position is about 6.7 billion. And when you compare 6.7 billion to the total market cap of 65 billion, it's not that high, about 10%. So they have cash and that's great. They can fund other investment opportunities in the future. They may acquire other companies or develop new services to invest more in marketing. So as you've seen, for the moment, they are growing. They are doing quite great compared to the last year, Q1 2023 and Q1 2024. They are growing. Besides this, they also have done more buybacks, as you can see here, the shares outstanding for PayPal. You can see that in the last years, this number has decreased from 1.2 billion to almost 1 billion. And this is great, because if they continue to do more buybacks, guess what will happen to the stock price? When the number of shares decreases, the stock price goes up in the long term. But of course, they also have to maintain their earnings to be about 5 billion or even more. So, if they can maintain their earnings or grow them even more in the future, then the stock price will go up if they continue those buybacks. So, there are many positives about this company, PayPal, which can push the stock price up in the future. But as I always say, you also have to look at the downside. What's the risk? And the risk is that they may not make more than 5 billion in the future, or maybe their earnings will decline even more. Do you know why I think that? Let me show you. First of all, you have to look at some important indicators, such as total payment volume, and you can see here their past performance, then their take rate, total take rate, and of course the number of users, active accounts and monthly active accounts. So let's take it one by one. First, total payment volume. You can see here the last quarter, Q1 2024. It was about 403 billion. If you look at the previous quarter, Q4 2023, it's a small decline from 409 billion to 403 billion. So as they reported the results for the first quarter, it was an increase from last year, Q1 2023, from 354 billion to 403 billion. That's great. But we also have to look back at the last quarter. Sometimes those numbers fluctuate. That's why you have to look at the whole picture. See the past quarter, the previous quarter, and also from the last year, and see how this total payment volume grows. For the moment, if next quarter they don't increase this total payment volume from this number, 403 billion, then that is a red flag. That's why you have to track the performance of this company. Then, another important indicator is the total take rate. As you can see here, this percentage has declined in recent quarters from 2.07% to 1.91%. And this is bad. Do you know why? Let me explain. You have the total payment volume, and PayPal charges a fee of about 2%. Of course, they offer more services, but their total fee, the total take rate, is about 2%. And they apply this 2% on their total payment volume, and that's their revenue. So, if the total payment volume doesn't grow more in the future, and this take rate, total take rate, keeps declining, then that will be a problem for PayPal in the long term. Because the revenue might not grow that much in the future. It may be flat, and also their earnings will be affected. That's why it's quite important to pay attention to those indicators. So as you can see, the total payment volume, the growth rate is flat, a small decline if you compare to the previous quarter, and you have to track this number, and the total take rate is going down. You might say that this is a small decline, but be aware that these small percentages, when you apply them to over 400 billion, it means a lot, quite a lot, and can make the difference in their earnings and of course in the stock price. Because if PayPal reports, let's say, more than 5 billion earnings, 7 billion, then the stock price goes up a lot, something like this, over 100% in just 1 year. That's why it's quite important to pay attention to their take rates and of course total payment volume. Then the third indicator, which should be the first one, the most important one, is active accounts. As you can see, Q1 2024, they had 427 million active accounts. You can also look at monthly active accounts, which were half of that number, 220 million. I also have a PayPal account, but I don't use it. So a better indicator would be this number, monthly active accounts, because those are the people who transact on this platform. And when they transact, PayPal makes money. They can charge a fee for their services. So as you can see, let's look at monthly active accounts. This number has increased a little from 2021 to 2022, so 211 to 221. Then it has declined. Then an increase to 24 to 224, and then another decline. So as you can see, this number is somehow stable. It doesn't grow more in the future. And if PayPal can't attract more users in the future to their platform to use it, then the total payment volume won't grow that much. And that will put pressure on the revenue and earnings. So the trend, especially for the take rates, is going down. And the total payment volume and active accounts don't grow that much. The number is about the same. As you can see, their numbers here, active accounts. They don't have a nice growth rate, let's say about 10%, or even more than that. And if you look at their competition, let me show you here, for PayPal, you can see that they compete with other companies. For instance, their biggest competitor are Google Pay, Apple Pay, Amazon Pay, and of course also Stripe. And if PayPal can't attract more users to their platform, then you know what will happen to their total payment volume and their take rates. They will go down, which will affect their earnings. That's why you have to be very aware of this company, especially if you want to invest right now. You still don't have a margin of safety, even though many people, investors, think that this company is undervalued. But I would say look at the future of this company. As I said, their active accounts, if they keep growing, and total take rate, which keeps going down. Those two important indicators will tell you the future of PayPal. And of course, the most important thing is the competition. Try the other products, see which one is better, and then you can easily predict what will happen to PayPal, if they will keep growing more in the future or not. So it's up to you how you want to invest in this company. If you want a margin of safety or you want to take the risk. You believe that PayPal can compete with the other companies, such as Amazon Pay, Apple Pay, Google Pay, and of course other bank companies. If you believe that PayPal is the best solution on the market, then you can take advantage and invest in this company. They'll do great in the future. But if you also want to focus on the downside, then you start paying attention to the risk. especially their indicators, active accounts, total payment volume, and their total take rate here, which keeps declining. So that's the risk with this company. And if you have other questions about this company, PayPal, or others, then please let me know in the comments.